Today, folks, I'm going to share with you the secret on how I'm going to become a billionaire. That's right. I found it. I figured it out. I can't believe that I've been missing out on this the whole time, but so many of you have brought this to my attention. I couldn't help but formulate a plan and realize I've been doing it all wrong here, folks. I ran a compound calculation and found a way to make 77% a year in cash flow. And I was just like, damn, man, I could just put $500 away a month and I'm quickly going to make 1.2 billion with a B, baby, over 20 years. I mean, Warren Buffett's a clown, a guy that annualizes 19%, cares about 19% when I can get 77%, guys. And I didn't even realize these products existed until somebody turned me on to YieldMax. I couldn't believe it. I was like, man, we could be making fat stacks here if we just focused on YieldMax ETFs. And everyone has been telling me I can't lose. I just got to go all in. MSTY, the monster covered call ETF, baby, that's yielding 77%. How could this go wrong in the long run? Anyways, obviously I'm being extremely hyperbolic, and the clickbait title of this channel will hopefully have drawn you into the fabulous conversation that continues to perplex my brain here of the covered call ETF strategy. And I have been having a crazy amount of arguments, conversations, and again, I'm somewhat of a degenerate clown, influencer clown here in the realm of the rest of them on YouTube, but I always kind of like my brain always kind of redundantly breaks things down to understand like why this is coming up so much on my feed. I mean, I'm seeing it literally everywhere. I'm arguing with it to my parents, like they're seeing this stuff. I have one-on-one chats with you, which by the way, thanks so much for supporting the channel. Those that go to kylelivingston.com, link in the description below, that actually book a one-on-one, because you guys as well have been bringing it up to me. And you're like, this is seems like an option. Doesn't seem like a bad option. And I have nothing against taking on speculation in your portfolio if it's done healthy in a manner that isn't pure degeneracy, but in the realm of dividend investors that really formulate on Blossom. Whoo, baby, it is hard to get away from the pure degeneracy. Now, don't get me wrong. I'm not here to get sued. I'm not shitting on Blossom by any metric. I think like it's funny because I grew up on StockTwits, which is like the most degenerate platform ever, but you have to kind of find your own degeneracy because you have to go find the stocks, add them to your watch list, and then you could read all the degeneracy that goes on in the feed. I mean, Stockhouse forums, that's how forums usually operated, but with Blossom, no. Whatever gets popular will just populate your feed and you'll get to see the degeneracy just kind of float its way to the top. That's what I love because it makes for great content on this channel. And thank God there are people that are recognizing the insanity behind some of this. And we got to talk about it, baby, especially with this. And I know I'm calling these people out. By the way, we're going to be calling a lot of people out tonight. I'm not here to shit on you, okay? You actually took the effort to publicize this shit on your social feeds. You did this to yourself, all right? You're drawing a bunch of, and the just, oh my Lord, when you read the comments and the congratulations people give these pure degenerates, it just like, my soul is like, people like really fall for this shit, man. So this is one that came up on my Blossom feed. And I was just like floored because obviously the headline really drew me in. 100,000 in dividends, a milestone unlocked. And when I think like when I hear 100,000, I'm like, okay, man, this guy's got like a 2.5, maybe $1.5 million portfolio that's kind of leveraged in some higher risk stuff. Let's read through it. I just crossed 100,000. Actually, I think I pulled this up a little bit more thoroughly over here. Let me just pull this up so we can read it nice and clear for everyone. I just crossed $100,000 in dividend income. And honestly, I'm still taking it in. What started as a simple curiosity about passive income has now turned into one of the most rewarding financial journeys of my life. Back when I began investing, I never imagined I'd reach this point. I wasn't chasing quick gains or trying to time the market. I just wanted stability, steady cash flow. Dividends gave me that. And over time, the snowball effect started to show. Here's what worked for me. I mean, consistency. I mean, everybody knows fucking you got to cost average into the markets. You can't just like go nuts here and like gamble and day trade. No, you just stay consistent with a high yield strategy that I focused on income generating ETFs, covered call funds, and select dividend growth stocks. Great, reinvested and compounding. Most of my dividends were reinvested, and that's my favorite thing. People that want to just get the largest yield possible to just reinvest the dividend. That's what we want to hear here for those looking for cash flow, baby. And then he says, guess what? I've learned from the community platforms like Blossom made this so much easier to track, share, and get inspired. Get inspired to be stupid, baby. This is like I live for this shit, man. I don't know if you guys know, but like, there are so many good Reddit rabbit holes that I go down where I just love seeing just people gamble and just speculate. And this is like the dividend side of that to me. I'm like, I don't find this stuff too often on Reddit. Reddit is usually like explosive option trading to the moon, stuff like the dumb money guys do, like Chris Camillo. But in this spectrum, I'm like, I didn't even know this really existed. I'm like, this has only been populating my feed recently, right? Like a lot of people I think have mentioned it in the past with like TSLY, which we'll talk about that in a moment. But man, oh man, like this strategy that this guy has is just awesome. And if we go back to this and you take a look at what he's holding here, it is basically the most degenerate. And right now, I'm going to come down to this because, I mean, you guys are going to grill me because these things are actually performing well in the short term. Some of them are like the MSTY one, but he's got TSYY, ULTY we'll talk about, MST. And I just want to show you the absolute absurd money that YieldMax is making, whereas any fund that has been around for too long has just severely wrecked investors. But this one keeps coming up on my feed because of MSTY. And the worst thing about it is it's like, there's people that I used to follow. There's smaller YouTubers. I follow a lot of them. And I saw this and like, it just like this, I don't even know what to say to this shit anymore. Like, listen to this.
Hey, y'all, hope y'all doing well. This video, I'm going to go over how I'm going to use income funds to pay off my mortgage early. I know this is a stark transition from what my past content, if you will. I don't know how much of this I'm going to do. You let me know if it interests you or not. But I'm going to use income funds to pay off my mortgage early.
And oh, look, what do we have here to help pay off our mortgage faster? We have ULTY, all your favorites. A lot of good YieldMax stuff here, guys, because, you know, this is going to work. I mean, our total yield is 34.84%. You know, Warren Buffett only made 19% a year, guys. Like, what a clown. I mean, in this day and age, what's 19%? 34, that's low. I mean, we're going to be getting 70 here, guys. I love it. I just love it, especially when people are like, I got a formula to pay my mortgage off quicker doing this, guys. You could learn from me too. I mean, it doesn't take much of a Gemini search to just ask yourself, like, am I actually going to make money at this shit? Or is it just like a degenerate dividend clown hole? And obviously, you know, Gemini and any AI with any level of intelligence is going to be like, you know what? On average, most of these underperform the S&P 500 over their periods of being publicly traded ETFs. But you know, 70% though, guys, 70%, we can't go wrong here. I want to just, before we get into the absolute absurd amount of money that YieldMax is making off this weird psychology, and what fascinates me the most is like during the last bull run, I think ARK was like the most popular ETF fund out there. And I will remind you, ARK, you know, since inception, if you bought it when it IPO'd, like it's done actually pretty well. It's annualized 13.52%. That's really not terrible. And on the last year, it's up 60%. 3 years, you know, annualized 20%. I mean, that's not the worst. The last 5 years, this has not been great for ARK because of the small cap realm, the volatility in Tesla, sure. But you got to give ARK a bit of credit if you've been in it for the OG amount of time, right? Like it's been around for a little bit, but nobody cares about ARK anymore. ARK is behind us, guys. That used to be the clown speculative ETF of 2020, like one. Now we're looking at like the next level shit. But before we do, I just want to like reround your brains and like wire them intelligently just so we can approach this with like a grain of like being on the same playing field, guys. Like if your entire portfolio is going to be YieldMax, get out of here. This is like those degenerate fascists that are on like Jubilee or whatever. I don't even want to have a conversation with you about it. If you're using it to pay your fucking mortgage off, don't even comment on this video, for the love of God. Just keep doing what you're doing and just get away. But let's just, you know, bring ourselves to a nice, well-rounded level of investing, the way it's always been, because it's never changed, guys. And I got to give the money guys here a bit of a shout out because they clearly have been in the same degeneracy that I've been hearing, because like this video just came out and I'm like, damn, thank you. I finally some sensible people on this friggin' planet.
What a lot of people don't realize is that when you invest, there are actually two components of return that matter. There is the income component, which is the dividend or the interest or the coupon that you receive. And there's this other component called capital appreciation. It's the idea that if I buy something for $10 and then it goes up to $12, I've had $2 worth of capital appreciation. And so Matt's question is, hey, where does dividend investing play into it? When we think about portfolio construction and investment management and how we allocate returns and how we pursue that, we don't like to bifurcate between those two. We don't think about, okay, what's our dividend return and versus what's our capital appreciation return. What we ultimately care about is total return. When we look at the total value return on the dollars that you're investing, what does that look like and how is that manifested across the capital appreciation component as well as the income component? A lot of people get so excited about dividend investing. Like, oh my goodness, look, I've got this 3%, 4% dividend yield that I'm getting on the stock.
He doesn't want to say it, but he knows those 70% yielders are out there, baby.
And it's amazing. And I'll say to him, hey, that's wonderful. But if you could have a 4% dividend or a 10% rate of return, like which would you choose, right? Obviously, you would choose the higher one.
Oh, bigger number better. Bigger number better, guys. Bigger number better. That I swear, dividend investors, bro, they see a bigger number better, and they don't even know that's not even the number. It's like not even a real rate of return. That's the hilarity of it.
As an investor, you don't really care where your return comes from if you're not living off of those dollars. Like some people have dividends pay, and that's their
income. But I reinvest dividend, compound, long rate return, 70% yield. Reinvest always, guys. Always reinvest the yield. Smart thing to do.
Income stream. That's a different thing than what Matt's talking about, because Matt's just an investor in the accumulation.
Sorry, I'm being like super hyperbolic. I'm not trying to offend anybody here. I'm sorry. Sorry.
Inflation phase. So when I think about how dividend investing plays in, it's part of it, but in my mind, it's not a singular focus. The singular focus ought to be on the big picture. What's my overall asset allocation? Where am I at on the risk spectrum?
There's one more really good aspect to this, and I'm sure you guys know like all that stuff. This guy has some good remarks too on it.
It's coming into me. I'm close to being able to 25% of getting all of my life covered through dividend investing. Do you see how people, that's your focus when you're saying, hey, I got $6,500. I'm just trying to replace like $40,000. You have now made the goal of this income, which should be just a feature, because that's going to preclude you. And Bo, I hate to pick on you. Back when you first started investing.
Oh yeah, no.
And you've told me the story. There was a software company that had like an 11% dividend yield, because if you start focusing on the feature and that becomes the goal, you might go and you try to get higher dividends. You don't care about the financial foundation of these companies. You're just chasing yield. Whereas you might be much better served, and this is what Bo was getting to, if it was just a component of a total return portfolio. Meaning that, and that's what we do for clients when they're retired. Yes, dividends are a component that we will take into account on somebody's cash flow management plan, but we're still looking at it in total with how much appreciation. Do we need to go sell equities as we're replenishing the safe or risk?
I said this on my video too. I always find it funny because like the amount of research people put into dividend stocks because they just don't want to hit the sell button. And I told this to so many people, like, you look at how much the S&P's gone up, and is it really that big of a deal if it goes up 12, 20% to sell 2 or 3% of it if you needed some kind of capital equity? You know, again, it's a balanced act here, right? Like, you guys know, anybody that watches this channel, and I know that's you, I know you guys watching this aren't the degenerates that I'm referencing here, but I mean, in the realm where people are willing to put this shit on the internet so comfortably, so confidently, and then I see the lemmings just endlessly like just stroking their ego, being like, oh, congratulations, you have a $200,000 portfolio that's making you what, $100,000 a year? Oh my God, you're a legend. I need to copy this. Bigger number better. Like, you know, it's so lunacy to me. And I just want to show you how much money YieldMax is making, because when I actually went down the rabbit hole of this company, like my jaw was on the floor, and I'm like, I am in the wrong business. I'm like, the psychology of how they have trapped, like YouTubers have really propelled this. And I'm telling you, anybody with 100% option ETF portfolio, I'm starting to I can't take it seriously. Like if I'm asking you what your return is and you tell me the yield of your portfolio, I'm going to smack you upside the head. You don't get to sit at my table. I'm sorry. I'm on this YouTube channel trying to fast track my financial independence. I have outperformed the S&P for over a decade. Now, I like to say that's a gloat, but it doesn't feel like a gloat because this market has been up and to the right perpetually since I've been investing, I think back in 2014. Like if you just stayed in the market and owned a few tech companies, you didn't screw anything up. Like, you easily outperformed the S&P 500. And that's what we've done. Like, that's what we're still doing. Like, if you looked at our portfolio and even the way I've invested since day one, like, I made some speculations on cannabis and some other stuff, and it worked out great. Sure. Those made huge rates of return for me. They were high speculative. But the reality is when I looked at my Apple returns, the Google, the Metas, you know, our S&P, like the wife owns some Microsoft, like we mainly have the S&P plus concentrated tech. And that, you know, is risk. It scares me a little bit because I'm like, I'd rather be a little bit more diversified. But hey, it's worked for the last 15 years. It's allowed us to buy a condo in Toronto, and it keeps seeming to work into the future. I mean, I think Microsoft is up like 40% from the lows, like all-time high. Like, it just keeps working. So there's going to come a time where it's not going to work. But like I said, we take profits, we diversify, we keep diversifying, and it seems to continue to work. I don't know how long this train's going to last, and it's not going to last forever. It has been the rarest market opportunity ever in history. Like, it's the best performing market in history. And I've been blessed to be a part of it. And it didn't take a whole lot of work, guys, to outperform. But these are the traps that lead people to underperforming. And I just want to explain to you like how, because like ULTY should be a great example of this. This is one that everyone's talking about with an 85% dividend yield, guys. Like I told you, you'd be a billionaire in less than 20 years. If you could put away $1,000 a month, guys, 15 years out, billionaire, boom, done. Like, that's all it would take. And it sounds like such bullshit. Yet people are just peddling this, and they don't even talk about the inception, like cumulative returns, the annualized returns. This thing's been around since what, it's been around for what, over a year now? How long has this thing been around? Since 2024 of February of 2024. And this thing is giving you a cumulative return, say it with me now, in totality, 7%. That is all you made in totality. Oh, I collected a dividend, guys. Dividend, bigger number better. Like, how? You made 7%. You know how crazy like the market returns have been since February of last year? Dare I even look it up? Before we do, let me just show you the disgusting amount of money this company's making. This fund has crossed $2 billion in net assets. The gross expense ratio is 1.4%. You are paying somebody 1.4, like, oh my God, like I can't even at 1.3%, guys, this fund is generating what, $36 million a year for this company. Over $36 million, guys. Did I even do the math right here? No, that's 2.8. I think it's 2.18. You get the idea. They're generating tens and tens of millions of dollars. This is one fund. This is just one fund. Let's just take it the same time frame here. I just want to, again, I'm not saying buy the S&P either. You globally diversify, do whatever you want to do. But if we just go back to the end of February of 2024, the end of February of 2024 was where? February 2024, just the end of February here. So right around, we'll just say February 23rd, the market is up 25%. So you think you've been collecting an 80% yield, but meanwhile, you've made 7%. You paid a fat 1.4% fee when you could have actually made a quarter of a return on your capital. A quarter of a return, guys. And I know YieldMax, and I've known them for a while because of like TSLY. And I remember this was a big deal, and everybody was ranting and raving about this. And it's been around for a while. And if you just take a look since inception, the cumulative return has been 18.29%. It has underperformed pretty much the year to date. The 1 year is actually not too bad at 20%. But since inception, the cumulative, everything that you have received thus far has been 18%. Whereas if you just bought Tesla stock, maybe we'll just do a quick comparable here. Since what? The 11th of 2022. So what is that? November 22nd of 2022. If we take a look at November 2nd of 2022, you'd have been up 75%. If you had just bought Tesla stock, you would have been up 75% instead of 18%, and you wouldn't have paid the fat 1% fee to underperform this. And there's $1 billion sitting in this fund, guys. Oh my God. There's $1 billion sitting in this fund making 1%. Oh my Lord. And everyone's telling me they're making this fat 64% return. It's like, okay. Good job. There's so many. I mean, you could buy the diversified one. Like, there's $1 billion sitting in YieldMax, which I think is just like the totality of their ETFs, or a lot of their ETFs combined. And they're collecting a fat 1.28% fee on this sucker. And this just gives you exposure to all of them, right? And honestly, this one, you know, it hasn't been around very long, so the returns still look pretty good in the short term. But again, anything that's been around for a while, like these funds, they operate really well in certain time frames when stocks are doing certain things, right? So, I mean, like, you could look at the ones that right now everyone's talking about, like MSTY, but like I like going back and just being like, okay, well, what about the stocks I actually like? Okay, so we have GUI here, GUI. No one's talking about GUI. Why not? Google's one of the best stocks in the market. It's incredibly undervalued. I've got over $50,000 just sitting in the stock. Am I an idiot? Maybe I should just buy this. This thing's been around since 2023, July 20. This thing's almost been around for what, 2 years? A little while. And the distribution rate is 30.86%. My God, guys, why am I even holding Google stock? I could be making 30% a year on it. The since inception cumulative return has been 8% almost. What has Google given me in the same time frame? It's 45%. Are you kidding me? You mean I made 8% since 2023? Now I thought I was making a 30% dividend yield. So you're telling me I could have made almost half of my money on anything I put in Google at the same time I could have bought the GUI ETF? And what am I paying for that? I mean, if I were to buy into that and be just as delusional as the rest of these guys buying these things, like, I mean, how much would I have made? Well, they would have taken a 1% fee, and there's $140 million sitting in this. Oh my God, $140 million. They're making 1% on 140 million. I'd be happy. Guys, give me your money. You got 140 million. You got $1 billion to give to this fund. Just give it to me. Just give it to me, guys. I'm like, I will do so much justice to your portfolio, and I will be so much less degenerate, and you will be able to sleep so much easier at night. I know you think you're paying your mortgage down, guys, but you're just paying your mortgage down with your own money. Like, you're not actually getting a dividend yield that's fast tracking your mortgage. It's just most of your money's getting paid back. You're getting slapped upside the head, underperforming every underlying asset over the long run. Meanwhile, this company is just collecting an ungodly amounts of money. What about Apple? Like, should we just buy Apple here? This one's been around since April 21st of 2023. What's this one yielding right now? Well, cumulatively, forgetting the dividend, just looking at the return has been 12%. And Apple's sucked. Let's be real. What's Apple's return been in that time frame? 29%. Okay, so we're not too far off here. 12% versus 29. Who cares that I underperformed Apple by half? But I got a 26% distribution, guys. Totally. Man, I almost missed the days. At least ARK was like, I didn't like ARK strategy all that much, but at least they own the underlying assets. At least 13% since inception. How long has ARK been around for anyways? ARK's starting to do real well again, but they've been around since 2014, guys. That's not a bad return, actually. I mean, that's actually a pretty decent return since 2014. So I can give ARK a little more credit here than maybe YieldMax, but my God, guys, give me a YieldMax fund that's outperformed. I feel like I've never seen such a high fee fund. That, like, could you imagine paying over a 1% fee on a fund that just owns a bunch of funds within them? Like, it's crazy. It's crazy. Oh my God, a $10. You're crazy, bro. I'm all like cracked out today, and I'm just like having a field day on this. But I appreciate you tipping. That's like the first tip I think I've gotten on this channel in a while. Not that I'm chasing you guys for any money. I do like the guys that are in my chat group and do support through my website, but that's more or less, I think, to help you guys a little bit more for those that think they need it. And again, I'm not as financial advice by any metric. I'm just absolutely blown away. I guess the people who bought MSTY since inception, yeah, they've done well. I'm not saying, so I talked about MSTY on my last option video, and it's done well in the time frame, but it is dramatically underperformed. Like, I'll just give you an example here, right? Like, all of these will underperform their underlying assets. And I'm not saying they can't do well. They can only do well in certain environments. That's what I'm saying. And those environments will not be consistent ever. Like, over the long run, these things are going to always underperform the underlying, right? So if we take a look at MSTY as an example here, and let's just pull up the actual since inception returns, and I'll just show you a quick comparable. And my thing behind this was, you think you want yield, but really what you want is return. So since inception, this thing's up 336%. That is unbelievable. Like, that return, like, I would applaud YieldMax for this, other than I would just be really disappointed, because like I'm a degenerate myself. And what I'm going to go do is look at the underlying asset and just be like, hey, like, what would the difference in return be? So since February 21st of 2024, if we bought Monster February 21st of 2024, February 21st, we'll just park it on the 23rd there, you would be up 490%. So you left such a fat stack of capital, almost 190 odd or whatever, 180 odd percent or something like that. You left an extra 180% on the table, where you've been paying a fee for this, the gross expense ratio of 1% on top of this, right? So it's like, so you just, you think you've done great, and you have, and I applaud it. I'm not like trying to diminish the returns, because these are absolutely astonishing, but you have to understand the insane amount of risk that you've taken on to make that 300%. The risk would have been better off in the actual underlying asset, where you would have made a superior, higher rate of return. And I'm promising you, over time, because markets aren't consistently up and to the right. And you'll notice the only funds that seem to perform well are the ones where the market is perfectly up and to the right, because since YieldMax has been working on this one, monsters that nothing but go up and to the right. Same with NVIDIA, right? So it's like if you capture the right time frame and you speculate correctly, you take some profits, whatever, you've done well. But if this goes in any other direction, like GUI does, like Tesla does, like say goodbye to any real rate of return, right? So I'm not saying that like don't own these. I'm not saying don't speculate. Like this could play a good part in your portfolio if you want to speculate. But what I hear is people blindly buying these, trying to pay off their mortgages, no strategy at all, just going to hold this in perpetuity and reinvest the dividends. I'm the dividend king. I have enough cash flow off a $250,000 portfolio to live in perpetuity. Like it's just pure degeneracy. Like you have to understand, like this isn't a way of life of investing. It is a way and a path to pure destruction for your portfolio over the long run. Like, I mean, you just talk to any sound financial advisor, not some bozo on Blossom, right? Like that's what we are. We're financial clowns on Blossom. It's supposed to be a place to learn. So I'm trying to take an educational piece here. And yes, I'm calling some people out, and I'd gladly debate them on these topics, because at the end of the day, I'm just transparent. Like I'll whip out my portfolio returns if you're willing to whip out yours. And who would you rather be? The guy with the higher return or the guy with the lower return? I built over, my fiance and I built $1 million portfolio doing the same strategies. And I just feel bad for these people, because I'm like, man, like you guys could be where we are if you just like, you don't have to do my strategy, but like they're all the same things roughly. It's like, the rising tide raises all ships. They don't, because like in different tides, covered call ETFs will not raise your ship very much. It's unfortunate. Google crushed earnings, stock traded sideways. Kyle talked me off the ledge. Thanks, Kyle. Still holding patiently. Yeah, people on Reddit are wild. It's for entertainment purposes, right? It's not like a philosophy. But what's weird to me is like, I love it for entertainment value so much. Like I grew up, like StockTwits is so OG to me, but like I loved StockTwits because like I grew up in like early day internet where like PDF files were everywhere, like crazy crap happened. It was the Wild West. Like, and you knew, like, even as a kid, like going into that, like you knew you had to be careful. And StockTwits was like the earliest days of like pure, before Graham Stephan, like all these guys and like these option ETFs, before all of this, all I had was StockTwits and like BNN. That's all I had. And like, those were not like the best formulas together, but like, oh my God, the raw degeneracy in Reddit, right? Like Reddit was a great place too. Like that's just where you went. And it was so much worse than it is now. So you just learned, you're like, this is insane. You like came out of that with some common sense if you didn't blow up your accounts. So, I mean, you gotta really have a grain of salt, but it's just weird to me how like these ways of investing can penetrate the market. And they are, because like $2 billion in just one ETF that YieldMax offers. YieldMax is now a multi-billion-dollar company. I mean, they're probably worth what, $50-100 billion with that kind of cash flow coming in off these funds. Like, are you crazy? Like unreal. Like how much is like the ARK ETF even managing? Like, let's just take a quick look. Is it managing more than the ARK fund is? I just can't get over that. I feel like I'm in the wrong business. Look at the net assets of this one ETF. So ARK is still pretty big at $6.8 billion. I mean, these funds are massive. Absolutely massive. Look at that. 6.8 billion. And the fees, man, like I can't get over the fees. Like the expense ratio is 0.75%. That's still pretty high, but hey, it's way lower than YieldMax. So I'll give them that. But my God. Anyways, what else is going on? Kyle, is the market reaching a top? I have no idea. If you could tell me if the market was going to top or bottom tomorrow, I will make us both millionaires very quick, my friend. We'll become millions very, very. If you could just give me one day of accuracy, like just tell me one day where you're 100% certain on what exactly the market's going to do, and I promise you I'll make you a millionaire in that one day. Kyle, Asian market, Asian accent? No, I wasn't trying to do Asian accent. Maybe I just grew up in the 90s. Maybe that just twisted into the, not trying to be, I live in, that'd be horrible here too. I live in Markham, man. If you know Markham, it's, I am the minority here in Markham. I got a lot of friends here and they're all Asian. I'm like, I am the minority. Yes, give me 60% yield for 80% downward return, lol. These crappy ETFs. But again, you guys know somebody, like you have to know somebody that's talking about this. My mother was talking about this. when my mom starts like throwing me like these ETFs, when her friends are like, guess how much my portfolio yields? Like, she's like, how are my friends making 10, 20% yields on their portfolio? And I'm like, like yield or return? I'm like, what are we talking about here? Because I've gotten you a great return. Like, there's a difference between yield and return. Blossom is so cringe. I don't mind Blossom. I love any platform. I mean, if it gets you engaged and starts your investing journey and helps you find your little niche community, go for it. I mean, YouTube helped me find a community. YouTube helped me build a career. I love the finance community on YouTube. I think it's probably one of the best communities out there. It's nice because nobody really shit talks that much. I mean, we're all kind of, I guess, the onslaught of strongman personal financiers. Like, there's quite a few YouTube channels that have onslaughted, calling out degeneracy or whatever. But for the most part, I feel like it's a pretty communal effort because we all have kind of the same ambition. So you don't get the clowns or like I guess the cancellation culture that you do with the rest of the YouTube lore. It's Kyle once again, chat. What do you think about EU and US trade deal? I haven't looked too much at the recent trade deals because Trump keeps changing them like every other week. And they've gone from like 50% to 30 to what are they at with EU now, 12 or something? I don't even know. We'll see where it all ends up. Covered call funds are garbage. To some extent, I don't think they're all garbage. I think they can serve a purpose. I think if you want cash flow, you're in retirement, you're trying to balance a well-structured portfolio. I've given you guys solutions like Devo. I think Devo is a good one. Jeppy's not too bad. I mean, there's some that have been around for a while. They have proven track records. Their expense ratios aren't absolutely absurd. They have great total returns over longer periods of time. I mean, at the end of the day, that's what you want. You just want a long track record, reasonable yield, like nothing crazy, great annualized, nothing like that's at the end of the day what I told you guys. Like I like yield, but if that yield doesn't come with upside on top of my equity, then I don't want it. And I mean, I really don't own much dividends anyways. Kyle, you're the bomb, Kyle. And yes, call them out. Why lie to people? I don't think they're lying. I think they're just misled. Because when you talk to them and listen to them and you like listen to these option YouTube channels, like they're just so proud of like dividend income. But I've seen a big shift too, like even in PPC Ian, and I have asked him personally on his channel and I've sent comments that he replied to, which I'm grateful for. And he even said like there was a time period where dividend investing really outpaced the S&P 500. But lately, like dividend investing is just not working. And that's the same with all these options, right? Like in the short term, everything can look great. In the short term, NVIDIA is an incredible stock to own. In the short term, everything can look great. And the short term to me is anything within 3 years, right? But when you start looking 5-10 years out, the story can become so dramatically different. And it usually does. Right? Like going from the dot-com bubble to 2008 to like the pandemic or going back to the 80s, like even look at the top 10 if you just bought the top 10 S&P 500 companies back in like 1999, like you still would have done great, but your portfolio would be so different than the S&P top 10 is today. Cause like Exxon was up there. Walmart used to be an S&P top 10, General Electric. I mean, like we've been in a blessed market where the top 10 actually hasn't changed all that much, which is why I've said like the trade of the decade, or at least the last 15 or probably going to be 20 years has been tech, but that's a really weird nuance. Right. But again, I just think these guys are, horribly misled. And I think, we'll see what happens long run, but they'll disappear. When we get one bad market correction, another downturn, they're gone. No one talks about them anymore. People have lost enough money. They'll move on to whatever the next thing is. BTC still king of all investments. Yeah, I mean, I don't know. I'm kind of back and forth on it. It's debating on selling some of the ones that we have. I think we're up a decent amount on the bit of Bitcoin we have. Just thinking about transferring it and continue to max out our TFSAs. Can you recommend AI stocks? The ones that I like, I mean, Google, Meta, I'm not recommending them though. I mean, they've obviously underperformed to some extent, except for Meta. Meta's done very well. But yeah, I don't know. AI stocks are hot right now, so I'm just careful. I think NVIDIA, in this time frame, I think NVIDIA is great. I just hope they can maintain like the long-term performance of those chips. I don't know how true that can be, but we'll find out. But at least I own it through the S&P. I mean, TSM, I love the chip market. It just scares me to own it right now. If I'm looking like 3 to 5 years out, because I kind of fuzzy picture on where that future is going. AI stocks in general, though, I love the idea of where these companies are going to be in the future with like the efficiencies, because luckily there's only like a handful of companies that have the CapEx to actually invest in the infrastructure. So, like, if you're looking 5 years out from now, the companies that are going to dominate most AI software is going to be Apple, Meta, Google, Amazon. That's it. Like I mean, I don't know how the government's not calling it a monopoly already, because like, is it really fair? It kind of reminds me of like the telecom giants, because the government basically here in Canada anyways, is force the telecom giants to allow smaller players to piggyback off their network, because it's incredibly monopolistic to have built a network and not allow anybody to use it. And the CapEx behind that is so god awfully expensive. Like for somebody to come in and just build the same network would be insane. So I think the same thing is going to be said about AI in the future. Like eventually you're going to have to look at it and be like, you know, if 5 companies control these massive cloud data AI centers and nobody has $100 billion to invest in it, is that fair or is that monopolistic, right? Considering those softwares are going to replace all of our jobs, and they're starting to, right? I mean, call center jobs, we're using it in my work. It's made things so much more efficient. We're already seeing big tech companies completely rework their entire employment or retrain their entire employees off AI. So, I mean, like, you know, that's the future, right? This is why we're still holding tech. Like, we're definitely upper weighted tech, but at 33 years old, you know, we're lucky enough to be in the upper percentile of people our age. Like, it's worth taking the risk, right? I mean, and for me, taking a risk to most people seems probably pretty minor, because we're I think 15-20% individual stocks, 50% index, and then some VDY and some global market. Like, you know, it's not like too crazy. I'll buy your BTC. Yeah, maybe I'll sell it to you. I'll sell it to you privately. we can transfer. I think it's a good little asset if you want to get into some crypto, but I'm still like more fixated on, I just do what works for me. I don't know what Bitcoin looks like. It's kind of like somebody in our chat group said it's basically just it's like a triple levered NASDAQ. That's what it is, like a triple leveraged NASDAQ 100 ETF, like TQQQ. When you're buying Bitcoin, it's like buying a triple levered ETF. The utility makes no sense to me anymore. Buy and hold asset could be the same as anything. There's better utilities than Bitcoin. I don't know what the long term looks like for it. Right now, Bitcoin is the same degenerate, just buy and hold asset like gold. And I could just bought gold and did well, and I don't care for gold either. You know, I got some back here. I got some silver and gold. Actually, you know what my favorite thing of 2022 was? If I can get this open, I'll show you guys. See if I can pull this out real quick. I don't know if you guys watched the movie Dumb Money, but I got a silver coin of this thing's probably worth a decent chunk right now because silver's gone up so much, but it's the blockchain, the mint. It's got the nice little meme stock guy, the diamond hander, little rocket ship on the back. Super cool. I should keep just collecting the silver coins of the generation, because this one, I want to get a YieldMax one next. Just a reminder of all the clowns that are going to get left behind that don't take profit, you know? It's another problem too. A lot of people go in, they buy individual stocks with no plans. They don't like look at balance sheets. They're just blindly buying and holding forever. They don't care if forward valuations extend by like decades. They just blindly buy and hold. I mean, a lot of those people came and went too during the GME era, right? I've been through a lot. I wish I lived through 2008. That would have been a fascinating thing to live through. If I had the same mindset, I'm pretty sure I'd probably be a lot richer today. What a time to be intelligent in investing. 2008, man, we could have been buying properties for so much less. Whew, man, I remember looking at properties back then, and I'm just blown away by the value those things have gone up to. Yeah, it's probably just a 1 ounce coin, up 300% on BTC. Nice. A lot of the cryptos are crushing it right now. They're good things to trade. Are you watching Take Two? Another entry point. I've been debating it. It's down in the 220s. It dropped enough. I'd contemplate buying it back to some extent, but I'm really just waiting. Like, I just want to be closer to the date, because I feel like a lot of it is priced in at this moment, and the upside at this point, like the risk versus the reward at the time frame required, kind of puts me on edge a little bit. I can trust Google. Like, if Google dropped 20%, I couldn't care less, because the underlying fundamentals are so damn strong. Take Two Interactive, because it's GTA 6 that doesn't exist yet, and its guidance is basically the same as last year. The company makes like $5 billion a year. They're basically like unprofitable. They dilute like crazy. Like, they raise money like there's no tomorrow. But the amount of institutional owners have been keeping the stock steady. I mean, it's like the highest institutionally held company out there for the most part. But the problem with it is, like, I just don't want to go into a market downturn or a black swan or something, because that stock, it just doesn't have anything supporting it except for the institutions. And if they switched their thinking, that stock could tank like it did back in 2022. And again, we were like getting close to 25% individual stocks, and I just didn't want to scale it down a bit. I'd just rather put it in Google. I'd rather buy more Meta. That's what I did, and just concentrate those a bit more, and then put the rest into ETFs and keep my allocation under 20%, just in case something happens. Because again, Meta dropped 70% in 2022, and it was a great company, but it still dropped 70%. So I just don't want the risk. But once we get to GTA 6, like I'm pretty sure probably the beginning of next year, I'll be more inclined to buy it if the market stays strong. But again, I mean, how much can it be worth? I mean, the game's going to print. It's going to make them profitable. But the valuation to me remains 60 to 80 billion might be my fair valuation. And we're already at what, 40 billion, somewhere around there. So the upside is becoming, it's still fairly limited. Whereas for Google, like I could justify Google going up 50 or 100%. And I could see us getting there. But GTA 6 is going to be a hype train. And it's going to be short-lived. Because it's going to be like a one-time major just revenue onslaught. It'll probably make more money than any piece of entertainment. The media is going to pick it up. Everybody on every forum, stock twits, are going to be ranting and raving about it. And it's probably going to do what Palantir did and just over-propel valuations. I wouldn't be surprised, mark the video, if it goes over 100 billion. So you could still probably double your money. But again, there's a lot of risk with that. But I'll probably get back in. Like I'm watching it religiously. I just want to wait till we're closer and we'll see what happens. I still like the stock. Don't get me wrong. I just wish they didn't move it because like right now is July. I mean, we'd be getting GTA 6 technically in fall, which was September. So, I mean, like what should have been a 6-month trade, which is what I bought it for, has become like a year and like a quarter trade. And that just puts me on edge way too much. UNH is one to keep an eye on. That one scares the crap out of me too. I kind of reference this to Chinese stocks. I'm like, why don't you just buy BABA? BABA's got great underlying asset value, same as UNH. Oh, well, BABA is a communist country, right? Well, so it's image, right? Like the image is the problem. You won't buy BABA because image sucks. Even though their fundamentals are great and it's a great company, you don't want to buy it. Same thing with UNH. The CEO was assassinated. The fundamentals are rocky on future expectations of companies. It's the biggest insurance company and it denies 30% of claims. Sometimes those stocks never recover. So you are taking risk for sure. But I don't know. UNH is an interesting one. And I don't live in the United States, and in Canada, we don't pay health insurance. It gets taken out of our taxes. So I have no idea what the industry looks like or the competition. I couldn't tell you anything about it. So yeah, I have no idea. It could be for sure, but if you understand it, go for it. What would Google's Waymo be valued? I wouldn't even worry about Waymo. Look at Cloud. Like Cloud alone, I think somebody said is worth like what, a third of the entire market cap of Google today. I mean, if Google was valued like any other company is valued, like Tesla, and Tesla's just, oh my God, I'll show you guys one more thing that made me laugh. I feel so bad for this guy, but like he really resembles how I feel about Tesla today. You guys should watch this video. It's called, I think it was Elon Fired My Wife. I think it's this one. And yeah, this video right here. Take a look at this, guys. I have like such a love-hate relationship for Tesla, but
Elon Musk had my wife fired from her dream job. Woo! Y'all, grab some pop.
This was such a good video, and I've seen so many good videos lately on the over-promise and under-deliver, and how Elon's a genius at just kicking the can down the road on his time frames and just always able to keep hype in the company. And the stock lives on that hype. Like the fundamental base that buys Tesla stock at this point are just, again, I'm a guy that used to own it. I made a fortune on it. I mean, I've done so well with it. I've never lost money with Tesla trades, and I've only traded them really twice, 2019 to 2020, 2021-ish. And then again, I think I made a 40% gain, last year on it or something. But regardless, like you have to recognize that the company, like you have to hold Elon accountable. You just do. The entire EV sector is still growing and Tesla is shrinking. How does that make any sense? And Elon won't own up to it. Elon on the earnings call literally said, oh, the reason that sales aren't great is because people just don't have money to spend. They just don't have money to spend. So we just have to make a cheaper car. It's like, first of all, why didn't you make a cheaper? Wasn't that the whole idea? You start with a real expensive one and then get a cheaper one down the road after the company's up and running so everybody can afford an EV. No. We're going to do a Cybertruck that no one gives a shit about that was supposed to do $250,000 a year and is barely doing what, 15,000 or something stupid. And then you've got a friggin' Roadster that doesn't exist that people put 200 grand into in 2017. I mean, the list is endless. Like they focus on everything other than like actually doing what BYD did. BYD took their concept and crushed it. They just focused and crushed. Elon just does everything and it's not starting to work anymore, right? Now everyone's like, oh, we just need self-driving to work. Okay. So the underlying fundamental of the EV revolution is over. That's it. It's not growing anymore. We're done. BYD is stealing the thunder, and people aren't buying it because, they can't afford it. Then how are they affording BYD? BYD is still selling $200,000 vehicles, for Christ's sakes. Sure, they have a $15,000 lineup, but they're selling everything and they're growing. So, I mean, own up, like smarten up, man. Like if you own these stocks, guys, you are a shareholder in these companies. They work for you. You don't be a fanboy. You don't have to be a fanboy. They are employed by you. You vote them in and out. And these clowns that Elon has assembled behind him just keep blindly being like, this is good. The house is on fire, guys. Our cash flow is deteriorated to nothing. We started a revolution. We're losing. But it's okay. We've got robots, guys. We have no idea what that looks like either. It's going to be another 10 years, but it's going to be worth trillions. I promise you. Trillions. The largest market cap company. Meanwhile, Google here is friggin' growing $28 billion a quarter. Like, gotta be kidding me. No, Google 20 PE. It's garbage. It'll never be the largest company in the world, guys. Google, no. Tesla, all the way. Anyways, what would Google? So the valuation is just to me insane. But anyways, guys, I'm done ranting and raving here. I appreciate the 190 of you that stuck around for my degeneracy. Don't sue me, YieldMax. Not financial advice, purely entertainment value only. Blossom, I love you. Brandon, you're G. I love you all. You guys have done great things for the community. I'm just YieldMax though. Questionable. I know you've done some good here and there, but long term, Gemini doesn't seem to agree. I don't know. Don't sue me, bro. I'm just spitballing dumb shit. That's why Buffett owns BYD and no Tesla. Yeah, and Buffett doesn't pay a dividend. Gotta ask yourself some questions there. Stay cool, stay awesome, guys. And as always, I look forward to catching you in the next one. Cheers. Peace out, everyone.